having me here today in this conference. According to what we talked with Luis, we're going to have this presentation in English, but at the same time, I will try to answer some questions in Spanish too. Para los que de pronto necesiten aclarar algunos términos en español, podemos ir combinando inglés y español. So we will try to do this as good as it gets for everyone. So the title or the talk that we're going to have today, Financial Literacy and Fintech Challenges and Possibilities in an era or in the era of social unrest, is the result of a theoretical exploration that I am working for my PhD in learning design and technology. I am a financial analysis specialist from the Belgrano University, from the Universidad de Belgrano. And I am also an MBA. I have also an MBA title from the university with the strategic management mention. I was there, Mariano, like almost 15 to 18 years ago, and I have the best memories of the Universidad de Belgrano. So this is my profile. I have been a professor in Colombian universities, and prior to that, I was in charge of the financial area of one of the local companies dedicated to the fertilizers industry. So I had some type of knowledge about like how rural communities and how farmers work in Colombia. And simultaneously, I was a professor in several universities in Colombia, and my area was finance and strategy. My titles from the university habilitated me. So when I began my doctoral program here at Penn State, I was curious about how can we make finances in general, finances more approachable to people. And in my exploration, I found that one of the trends that were gaining traction at that point was the financial literacy or financial education initiatives across the globe. So what I will try to introduce in this talk is, this is an exploration again. This is nothing definitive. So I will be interested in hearing from you too about what are your thoughts and what are your ideas regarding the topics that we are going to share in this talk. So I have designed this talk in three different moments. The first one is calling an attention on the question of why inequality matters. ¿Por qué hablar de desigualdad es importante y es relevante? The second one is regarding what is financialization o financialización en español. We're going to explore a little bit in that concept. And the third point or the third component of this talk is what are the challenges and opportunities for financial literacy and fintech in Latin America. And in that final section, we are going to explore also what is financial literacy, what is fintech, and we will have some insights about those two activities. So with that in mind, let's start talking about why inequality matters and how inequality looks across the globe. So,
tipo de situación donde estamos nosotros acá en horario, donde bueno, tenemos un tema que nos
I am receiving some audio. I don't know somewhere, but we're okay. So if we talk about inequality, the main idea here is inequality is something that is affecting people in general. And we've been, and you in Argentina and me being from Colombia and in Latin America in general, but not only Latin America, but in other parts, in other regions of the world, including the United States, where I am at this point, we witnessed how people went to the streets, people were protesting, people were demonstrating their rage and their unconformity, their unconformity in the streets with the situation that was happening, like from 10 to 15 years ago to today. 5 years ago, no, well, in 2019, for example, I'm talking about the case that I am more familiar with, the case from Colombia. Due to the intention of the president of that point, of the government of that moment, to implement tax reform in the country, people in the streets, or people felt at that point that that reform were against the interest of the poorest ones and were directed to the interest of the wealthiest ones. So when people felt in that way, they decided to go out to the streets and demonstrate and start protesting. And we had, I will say, like several weeks of social unrest in Colombia. But that happened not only in Colombia, that happened also in Chile, that happened also in Argentina, that happened in Peru, and more recently, or like before that, in the middle of that situation, we had the pandemic, the COVID-19 pandemic, something that exacerbated some of this situation. So these excerpts that I am presenting here in this slide are from an article published in January of this year. And as you can see there, people is showing their unconformity because they are feeling that they are more poor, that they are poorer than they were before. And this is a phrase from someone in Buenos Aires when they say, like, we are poorer than we were in 2001. And in 2001, you know what happened at that point. I was in Buenos Aires a few years after the Corralito and the situation that happened there. So when people felt in that way, it is clearly something that we need to address in some ways. And although the efforts made to reduce poverty had worked, according to the data from the United Nations, you can see here that in 10 years, from 2003 to 2014, poverty dropped from almost half of the people being poor in our continent to 1/4 of it. This improvement has received and has gone back in the last few years. Of course, again, the pandemic had a lot of influence in the like gaining power of poverty in our country. So when people feel in that way, they start going out. So this is part of why we need to understand what are the phenomena or what are the causes that are behind inequality, how inequality is lived by people who is suffering from poverty or that is like in this impoverished condition, and how can we that have some type of privilege, because we need to acknowledge also that we people that is educated, that have the opportunity to go to a university, to a private university in this case, we are privileged, and how can we use that privilege to support the needs of the people that is in this situation. So what I'm going to share now are the results of a work led by Thomas Piketty. Thomas Piketty is one of the most known economists in the recent years, and it's recognized by his work about inequality. He is leading an institute, the World Inequality Database Institute, where they are collecting information related to how inequality is perceived and how inequality is lived and how inequality is evidenced across the world. So first, here we can observe like how there are two types of inequality. One is inequality regarding income, and the second one is inequality regarding wealth. And what we are able to observe in these graphics is like the blue color represents half of the people in the world in general. Like when they refer to bottom 50% is the 50% in poverty, or the 50% that has the least income. So when we are talking about income, we are talking about like the amount of money that people bring to their home due to their work or to other situations, but how people earn money. What this graphic is showing us is that the top 10% of the world is receiving or is generating more than a half of the incomes that are being generated in the world. Meanwhile, the 50% in the lowest portion of it is only generating 8.5% of the general income. So this is an inequality in the distribution of income. And what this inequality in the distribution of income is causing is that the people who has the highest incomes are earning more incomes every time, while the people who has the less incomes is having to share a smallest portion of it. On the other side, when we talk about wealth inequality, wealth is referring to the amount of assets that people have in their household. And here the inequality is even worse. Like the top 10% of the people of the world has access or owns, because this is an ownership matter, owns 3/4 of the assets of the world. So they are the owners of every like 3 out of 4 monetary or dollar, let's say dollars in general, that are available in the world. And the bottom 50%, so this is the 50% of the people that are in the lowest proportion, only owns 2% of wealth. So this, again, this speaks of, this is speaking to us about like the differences that are happening between those who have more and those who have less, and how these situations are getting maybe worse in the time. Let's see now in the next slide. We can see how this is happening across the world in general. So if we look in Latin America, for example, in Latin America, the concentration of wealth is the highest one in the world. Yeah, like the top 10% in Latin America is the top 10 that owns the highest proportion of assets in its region. So this 10% captures 77% of total household wealth, and this compared to only 1% captured by the bottom 50% by the bottom 50% of people, makes us think like there are some things that we need to think different in order to reduce those the gap between the wealthiest and the poorest. If we look at in general in the map of the right, you can see the distribution across the world. What we are able to observe there is that Latin America, South America, and Africa, and especially the sub-Saharan African region, are the regions where the ratio between the top 10 and the bottom 15 are, let's say, there's a noise again. Okay, so where these situations are the worst. So Latin America definitively needs to do something, but you can see here also in this map the countries that are like doing better in Latin America are Argentina, Uruguay, and Ecuador. So that speaks also about some of the policies or the so some of the policies that have been implemented in those countries, and we need to learn, like the other countries in Latin America probably will benefit from learning about like what are they doing in these countries. Just to confirm, like what we have discussed before, these graphics show the historical distribution of income across time. So in the study that this group is publishing, they are talking, or they have data from 1820 to 2020. So this is 200 years of data. So what we can see here is that the situation got worse in the first 100 years in 1920, and probably this is caused by the crisis of the 20s, the global crisis in the 20s after the first World War. The situation was getting worse, and starting from that point, from 1930s and over, the situation has like come to a steady distribution with an increase in the change between the top 10 and the middle 40 before, or in the 1990s. And this is probably explained by the global crisis that were happening at that point that affected the middle classes everywhere. But in general, when we compare the top 10 and the bottom 15% of the population, the situation have remained relatively steady, with a 55% of the income going to the top 10% and only 7% in 2020 going to the bottom 15%. So again, this is just to show like how the distribution between those two proportions of the population are happening and are evolving. And in the figure in the right, this is the situation for Argentina between 1995 and 2021. And again, like despite a small like break of the trend between 2006 and 2011, that you can explain probably better than I can do. But the situation has been also like very steady. Like around 60% of the wealth in Argentina is owned by the top 10, and only like 4 or 5% of the wealth is owned by the bottom 50%. So this is just to help us have an idea of how inequality is something that is real and that could help us understand why people is looking for alternatives. If we go back to the journal article that I presented that was published in January, there are some places that like people is tired of what is happening, and people is feeling that they are being exploded. And this is the reason why. These numbers can help us understand why people is feeling that way, and that is their life, or they live reality better. So some of the key insights, and with this, I conclude this first section. Some of the key insights from this report that can help us like to have this wide perspective is, for example, one of the most important is when the authors claim that inequality is a political choice. Inequality is not inevitable, but it's a political choice, and is the result, according to data analysis, is the result of the economic system in what we are living. This is not to say that this is necessarily like that they have the solution. They don't present exactly a solution here. They just say like, yeah, we need to think about a different alternative because definitively this is the result of a political choice. Another interesting insight from their analysis is that while nations have become richer, and this is talking like about like the gross domestic product, the Producto Interno Bruto is increasing, and nations have become richer, governments have become poor. So what this talk is, and we're going to explore that in the following slide. What this is talking about is like the private sector is the sector that is capturing the highest amount of value, but nations, but governments are not taking like the best or the best proportion from these incomes. And one last thing that I will highlight from these insights is that inequalities are not only economic inequalities, they are making a connection between economic inequality and two critical factors. One is gender inequality, like when they have, or they presented this report, and I invite you to visit their website. What they are presenting there is that women in general in the world are capturing less value and are generating less income. I think that the difference is women are receiving 35% of the income worldwide, while men keep capturing the 65% of the income worldwide. And what they have found, and something that I have also learned recently, is that are countries where, for example, women are not being considered, or women can inherit their parents' wealth. So when their parents die, only the men are the ones that receive the inheritance, and women are just like not considered for that distribution. And that is happening still in our era. So this is shocking as it could be, but it's happening, and that has a direct impact in the wealth distribution. And the second element is like how they are connecting also economic inequality with the carbon emissions, the amount of carbon emission. So there is not necessarily a connection between these two. But what they have discovered is that sometimes the global north is blaming the global south, countries in the global south, like blaming them to be the ones that are the most that contaminates the most, and that is not necessarily true. Like low income economies are not generating the highest carbon emissions in the world, but there is not also like a correlation. The high level economies are not doing that too. So it depends not on the income level of the country, but depends on other factors. Like for example, what they can say there is it depends on how the economic production is structured depending on each country. So yeah, so these are like the key insights, and I would like to hear if you have questions or ideas about this at the end of the talk, but keep this in mind because I think this is one of the critical points here. The second part of the talk, in the second part of the talk, I'm going to what is financialization, and I don't know if you have heard about this topic before, this term. If you have heard this was new for me when I was doing this theoretical exploration. So yeah, I would like to hear if you know about what is financialization or financialización in español. And this is a phenomenon that has been like studied mostly by economic geographers in the last 20 years, I'd say, and they are making a connection between the idea of financialization globalization and neoliberalism or neoliberalization. So basically what financialization is could be understood from three different perspectives. The first perspective is, and this is something that we have, let me just point here. This first perspective is saying that is what they say that, okay, the institutions in general in the economy have been like financialized, all right? Because the most important thing for institutions in general have become the ideas of capital accumulation and profit generation. So when we when we studied the strategy, I remember like when we were reading Michael Porter. Porter was clear in that idea of we need to generate value. He later changed his discourse and he included like value was not only value for the shareholders, but also value for the stakeholders and the society. And he came with this like moderated perspective of shared value. But definitively, like what institutions are looking for are the profits and accumulation. And again, the second point here is when we talk about like the corporation in many sectors, what is becoming more important beside the business objectives is again like the shareholder value. Like it's like a repetition of the idea of companies are the goal of the companies is just generating more value for the shareholder. So these are critiques to the economic model. Again, there are some theories and ideas and frameworks that are helping mitigate this situation. But in general, what the scholars from these perspectives are saying is like even companies have changed what is important for them, and they are just focusing on this. And they have, some of these analyses have demonstrated how profits in some companies have been gained not by the business, by the core business itself. Like let's say that they produce cars. So their biggest profits are not coming from the commercialization of cars, but for the gains that they are obtaining in the financial market. So when this happens, and this is happening a lot, when this happens, these scholars are saying like, yeah, this is the financialization of the corporation. And the third perspective here is like, yeah, the daily life, people's daily life, your life, my life, our culture, our identity have been financialized too. And what this means is that finances have increasing their presence in our lives. And this is happening. This is not, I won't say that this is necessarily like good or bad. And when we talk about fintech, we will see that this is going to happen even more. But think about this, like when our parents, when our grandparents even were like, they had to think about the bank or think about having a debt or credit, they had to go to a physical bank, and most of them don't even have the time to go in, or they have specific times to do this type of activities. But if you or me, we would like to check our bank, we would like to know what is our balance in the bank. We just open our smartphone and we open the app of our bank, and we are able to see if we have enough balance at some point or not, or we can apply. And when we talk about fintech, we will discuss this again, but we can open a credit online, just sending the documents online, something that didn't happen before. Like when my parents wanted to buy a car, they will have to collect a lot of information, take it to the office, and they will take like 10 days to respond for this request. Today is just a matter of minutes. So this is just to give an example or an extreme example of how our lives have been financialized. But also, when we think about pensions and retirement, the suggestion that young people as you in their university, in the college years are receiving probably is start saving for your retirement. That is something that people from my age, we started hearing that later when we were starting like our jobs, and our parents probably never heard about the need of saving for their retirement. So now we are responsible for things like that, and that is due to this phenomenon of financialization according to these scholars. But financialization has like also different perspectives that I am still exploring, and I would like to hear again, like what do you think about it? This idea, for example, that and it's a critique that these scholars make to financial inclusion. I'm sure that you have heard about financial inclusion as one of the strategies that some governments in Latin America are implementing, like looking to engage more people with the financial system. It's taken from financialization scholars from a critical perspective, and what they are saying is, yeah, it is like if the goal of engaging more people with the financial system is to foster economic growth and reduce economic inequality, this is not happening, because as we observe in the numbers, inequality is not going back. Inequality is increasing in some areas. So yeah, so maybe the idea of financial inclusion needs to be revised under the light of some of the findings that we're having. So it is not only to provide access to the financial system, there are other things that need to be addressed. And financial inclusion strategies have become central for several governments. And in Latin America, I have participated in leading some of these training programs and training programs with the governments led by the CAF, the Banco de Desarrollo de América Latina, CAF. They are like pushing this discourse of financial inclusion across the continent, across Latin America. And the goal is, again, like we need to reduce the amount of the population that is unbanked. We need to bring people and engage people with the financial system. We need to provide access to affordable credit. That's the second point. Providing access to affordable credit for people, because if people have access to credit, they will be able to start their business or make their business grow, and in that way, the economy will grow and inequality will reduce. Again, that's like the cycle that they are basing their ideas on. But the problem is, what is affordable credit? And some questions, as we will see again, as we will see in the next slide, is like, if the idea is to increase the access to affordable credit, why are we charging poor people with higher rates of interest? And the third point that is guiding like the financial inclusion policies is like improving financial capability. And this is totally related to the idea of financial literacy or financial education. So what the critics are saying is, yes, if you are engaging people with the financial system, you are not only engaging them with the benefits of this system, you are also engaging them with the risks. And if we have a relationship where the power imbalances are evident, like banks and financial institutions have more power than people, this relationship could take us to exploitation practices, and this is probably making things worse for these people in vulnerable conditions. But also the idea of financial inclusion has been criticized for being a way to promote the shrinking of the welfare state, like where the state is not anymore focused on providing well-being to their citizens, but is just like focusing in a small set of activities, and individuals are being responsible for their well-being, and therefore the financial system can provide them the means to achieve that financial well-being. So that's something that is also in the in the discussion there, and that we can keep exploring. But definitively, like, financial inclusion strategies need to be at least aware of these situations that they are causing, because otherwise, probably the benefits or the challenges are going to be higher than the benefits. And for this slide, I just based this slide is based in a book written by a couple of Argentinian authors. Lucy Caballero and Veronica Gago are professors from the University of Buenos Aires, and they are also activists, feminist activists. So they are taking this. They were out. This book is the result of a research that they did with people out in the streets when the protests were happening in Buenos Aires. So they present an interesting perspective of how can we see debt from another, or give debt another reading, not only like this ideal perspective of yes, debt could be the way to increase growth, economic growth, and reduce inequality. But they say, no, let's think about this too, because debt, when we approach this from a feminist critic perspective, debt is probably causing more problems than benefits. So they use, and of course, as feminists and activists, they use strong terms that are important in this discussion, and they say, like, debt is a mechanism of subjection and servitude. And what they are saying is, like, if people is indebted, and they are not the only ones saying this, by the way, but when people is indebted, they are subjected to, or their power is even like, they have even lower power when they have debt, because they will have to think about, they can't stop doing what they are doing, because they need to think about, like, how to generate incomes to be responsible for the debt that they have acquired. So this relationship between debtor and credit is the example of how the power imbalances in a relationship can affect the interest of one of the parts. And if we take this to the initial point that we were presenting here, of course, the power side of this relationship is the top 10 wealth income in the world, and the part that has less power are the 50% at the bottom of the economy in general. So this is something to think about, and we need to also, when we approach to these terms, at least give the opportunity, or have the opportunity to think in a different way, will help us to come with alternatives that would be beneficial for the economy in general, for the society in general. And the second point that they raise here is based on David Graeber's book. He has an amazing book about debt too, but he approached this topic more from, not from the individual perspective, but from the macroeconomic perspective. And in his study, he like analyzes, or he examines how the crisis of debt happening at the end of the last century was a kind of a regime of global governance where countries from the global north just like increase the indebtedness of countries in the global south to be able to influence their decision. And one of the arguments that he presents in that book actually is that some of these loans that the global north were providing to the countries in the global south and global south in the Latin America, Caribbean, and Africa were given to countries where autocrats or dictatorships were in that moment, and that money, like a point that he raises is that the money that the financial institutions, the big financial institutions, lent to these countries didn't even get to the country, but to the dictatorships or autocrats' pockets. But the people is still responsible to pay for this debt. So it's an interesting perspective too, thinking about like how the relationships between the wealthiest nations and the poorest nations are being regimented by this relationship of debt. And finally, the third point that these authors raise is like how non-financial tasks, sectors, and spaces have been like securitizing. And this is something that happened in the 2008 crisis, for example, like the mortgages, the ECOTECBIZ, how these mortgages were taking like 3 times due to this securitization of the mortgages. I mean, like la titularización de esas operaciones, and how these were used to make profits for the financial system, but at the beginning it doesn't have any relationship with the financial system. And let's think about this, for example, like how ports nowadays, this is something unrelated to what they are saying, but let's think about it. It's like how sports are being...
I'll say 5 more minutes.
Okay, are being subjected to this betting houses, betting websites. So now you can make money just watching a game and betting that a player will make a goal or not at some point. So, okay. So sorry, I get engaged in this point. So this is something I will take the last 5 minutes to focus on 2 points. One is the idea of financial literacy and how we can rethink financial literacy. Financial literacy, the traditional perspective on financial literacy is based on the ideas of knowledge, skill, and attitudes, but they are forgetting at some point that these awareness, knowledge, skill, attitudes, and behaviors are happening in a specific setting. So the idea here is come with an alternative approach that acknowledge how financial literacy could be about or could be a sociocultural, or could adopt a sociocultural perspective. So this could help to reduce or to respond to the critics that financial literacy is receiving. Financial literacy is being blamed or being framed like this is a neoliberal idea and just transmitting a message to the poorest from the wealthiest. But if we include people in what is financial literacy and what they need from that, that will help us to solve like the problems that we are facing now. These are just like a couple of ideas that I've been collecting from the readings that I am making. For example, the one that I like the most is like changing the individual wealth accumulation focus for a collective focus, for a holistic approach. And also like financial literacy must facilitate the critical engagement of citizens. This is also something that has been criticized by some economic geographers that call financial literacy, like what they say is financial literacy is a way to increase neoliberal literacy. And this, the critical engagement of citizens, I think, is the key here. Like, financial literacy must help us understand how these topics that we've been discussing work, instead of just invisibilizing them. And just talking about fintech, this is a report that were presented by the International Monetary Fund and the International Development Bank at the end of last year. They are talking here they are presenting here what are the verticals or the sectors where the fintech companies are more engaged with, and definitively, like, digital payments is like the sector that is capturing the highest amount of companies. Within digital payments, we have different activities like mobile wallets, money transfer, and you can see here in the presentation. But what I would like to highlight is the idea of the alternative finance. When we talk about alternative finance, we are being able to identify here 3 different types of finance platforms, like the debt-based, where peer-to-peer you can ask for money to one of your peers, the equity-based platforms where you are investing and you are receiving shares from the companies that you're investing in, and the reward-based or donation-based, like the crowdfunding that work only like Kiva or other platforms where people just donate their money but don't expect to have like a collateral back or anything back other than a reward. In Latin America, we have more than 300 million of users of these digital payments, and this is something that is interesting, considering the penetration of the internet in our continent. So even though we don't have the best internet penetration, we are reaching out to an important amount of people. But what they are looking here is just like a minute exchange digital payment. They are not going really in these ideas of alternative lendings or alternative financing. They are more focused just on the transaction. So what is happening here is that the fintech sector is shifting the way that people make transactions, but not necessarily like impacting the structure of the system in depth. And in the graphic of the right, they are just showing like what are the source of funding for these fintech companies. And what we can observe here is how the angel investors proportion had reduced from 2018 to 2020, and it was like replaced by sources like risk capital. So the risk capital, that is like the pink portion here, in 2018 was only 6%, and in 2020 is 17%. This is showing us is that global funds are becoming interested every time more in fintechs in Latin America. When we talk about financial inclusion and when I think about these social things, like these social aspects, the number of companies focusing in these underserved markets have increased from 2017 to 2020, and this could be an impact related to the pandemic in 2020, where people found out that this is something important due to the protests and these activities, and the percent of services directed to underserved markets also have changed in the recent years. And something that is relevant and critical here is like how women are participating in the fintech business. So the percentage of fintech firms led by female have increased, and is in 2020 was 40%. And the parity among customers, that means like the people that they are attending, also increased in 2020. So this is something that is showing the trend that fintech companies are becoming more gender aware. Just to close, like boosters things that have helped these trends, the limited access to finance from banks and the insufficient competition among banks have opened these possibilities to fintech companies. Also, the improvements in digital infrastructure, although we have a lot of things to do yet here, but we have been improved a lot in the digital access. And again, like this, and this is related to the graphic that we were seeing, like access to venture capital is one of the boosters, one of the critical boosters. At the same time, I will say that this is a problem because these venture capital funds are looking profits, and this is one of the challenges here. Like the funding, when I talk about funding structure, these funds are looking for profits, and these profits at the end are just perpetuating the cycle from extracting value from the poorest to the richest. So we need to think about like how to challenge that idea of extraction, of value extraction. And this is only something that can be made, like rethinking the models of these fintech companies. So yeah, this is one of the points that I presented in the conclusions, like to be really disruptive and not perpetuating these practices. Fintech companies and fintech company leaders and fintech companies users require a shift in their mindset. But this requires a comprehension of these phenomena that we've been discussing. And that is where financial literacy or financial education could play an interesting or a critical role, increasing the awareness of these situations and again, opening like different possibilities that we can implement. So yeah, Luis, I think those were the 5 minutes or maybe a little bit more. Sorry about that. And I don't know if we have time for questions.
Gracias, José. Acá estuvo un poquito complicado en algunos momentos la comunicación. Lo que vamos a hacer para continuar, me parece que mejor vamos a seguir con la siguiente sesión y dejamos las preguntas para el final, ¿puede ser?
Sí, perfecto, aquí voy a estar.